Hey everybody, Preston Brent here with Trader User Group. This is our weekly roundup for the week ending May the 9th, 2014. Before I get going, we've got a lot of people that are interested in some of the offers that we're doing, and you'll see here on this video a link right now to one of our most popular special offers, which is our membership and coaching package. Check it out. Just click on the link and go tell me what you think. And then when you're done with that, come on and join us. I think we've got a number of people that have taken advantage of this offer. Now, after that, then come on back and just watch the remainder of this update. Now, why don't we get into this update? Speaking about the update, about the markets and where we're sitting here. What I've got on the screen right here is the daily chart of the E-mini S&P 500 futures. You can see here again as we step out with all of this movement up and down. You can see over the past probably about 5 or 6 quarters here, you can see we came into 2013 and then we formed this channel, and we've been pretty much adhering to this channel the entire time, and now we're sitting right in this area here. Of course, for 2014, we've been very volatile. I'm going to blow this up in a minute, but I do want to show you now that we've got this entire chart on the screen here. You can see that dramatic bearish divergence that we're sitting in here, and we just can't seem to penetrate these highs right here that are kind of fitting in this zone right here. But we've got this dramatic bearish divergence, but I would say that it's kind of like a tale of two cities, meaning we've got the E-mini S&P 500 futures, or the S&P cash index, and the Dow, and then we have NASDAQ and the Russell, which if you were to look at their charts, which we will in a minute, they're completely different than these. So let's just take a look at this here for a minute and kind of see where we're sitting. I'm going to blow this up and you can see right now, if I were to come in and say let's just zone in on 2014, you can see right in this area here, this is 2014 right here. You can see we entered the market right in this area right here as we came into January. And now we're sitting right here. So we haven't really moved up but about 35 handles or so, not very far on the S&P 500 futures. But we've had a lot of volatility along the way. I mean, it's just we've moved a lot and really not moved very much at all. I mean, we've kind of moved net just up to that point right there as we're going into May. So we're about, not quite halfway through the year, and we have just done a lot with not much. And you can see here when I blow it up, we got that bearish divergence sitting right there in our face. Now, a couple of things. We are still inside the channel here. We had a couple of key days the other day where we held the 50 EMA. You can see on here very clearly on the S&P 500, we held the 50 EMA. We did during the day we came below it, but we were able to stay up above it. We haven't closed below the 50 EMA, going all the way back to about April the 6th, the second week in April. So, and here we are sitting right up in this area here. So overhead resistance is still sitting at 1887. We got support at 1867.50, and then of course the low for Friday, which is around 1860, and maybe a couple of pennies. That's kind of where we're sitting right now in the S&P 500. But we do have this bearish divergence, which is a little bit concerning here. The markets are having a tough time of it. And if we look at the Dow is not quite as strong as the E-mini S&P 500, but you will see the Dow here. And if we just let's just take a look at the year like we did with the S&P 500 futures. If we look at the Dow for the year, it's right at about right here. Here's the year right there. So you can see with the Dow, we entered the year right about there, and now we're right about there. So, I mean, we're just almost flatline for the entire year. I mean, we spent a lot of time coming up to the flat line, but we just hadn't been able to penetrate this part up here. I mean, it's just been very difficult for the Dow. So we got the E-minis kind of a little bit better performing than the Dow, and the Dow has made a big recovery from the down swoop that we experienced end of January going into early February. But outside of that, it's really hadn't moved anywhere. We still got the bearish divergence showing up here. So we got both the Dow and the E-mini S&P 500 futures, the E-mini Dow futures, the E-mini S&P 500 futures, just having a hard time cracking this nut up here. I don't think we're going to be able to crack it unless we get follow through with the other two. Let's take a look at the NASDAQ first. This is the NASDAQ 100 futures. Completely different chart, folks. Look at this. Um, Again, if we blow it up and we look at the year like I did the others were challenging the highs, right? But here, if I blow it up, you can see right here, um, we got the year. We entered right there, and now we're sitting right here. So we're slightly, for the NASDAQ, we're just a little bit below, right? Right in that area there. So that's kind of how we've made it, right, like that, right there. So we're just a little bit lower on the NASDAQ 100. Not a lot, but we've had a lot of this movement here. But net, you know, going all the way back to March, there's been a huge rotation. Look at this regression line coming straight down. Huge rotation out of higher beta, higher PE stocks. This is the NASDAQ. You can see we've tested this area. We actually challenged the area right here, right here, right here, and then right in that area there. Call it 3,400. And now we're back down again. We're on a down, we've got a down bias on the daily bar in the NASDAQ 100 futures. So we're just, we're just kind of moping along here. And it's clear that unless this can come up and regain the 50 EMA, which has got a little bit of a downward vector there, clear it and hold it. I said earlier we need to clear the 36, 35, 25 area. If we can clear that and get up into this area here, that'll be very bullish for both the S&P 500 and the Dow. But we got to clear that. And if we look at the rut, which is the Russell, it's worse than all of them. Look at the Russell. Very, very bad. I mean, if we look at the Russell, and let's just blow this up for the year. We'll put the year in a box so that you can see it compared to the other ones. I mean, let's just put it in a box here. I mean, look at this right here. Clearly with the rut, much worse than NASDAQ. There's where we started the year. That's where we ended the year. So as you can see, that has got a higher vector to the downside on the rut. All right, and we were able to get way up here, but we've just been working our way down in this regression channel the entire time. All right, and now we had a hard reversal on Friday. We moved up about 9 points, but one day does not a market make. That's a solid support point at 1078. We came just north of that a little bit there. And you can see these two areas here. One area of hope that looks halfway decent from that low to that low. They're about flat, but we do have a bullish divergence, okay? Now, we are still down on the daily bias, but we got a little bit of a bullish divergence here. And if I blow this up for the Russell, you will be able to see that we did recapture the 200 EMA. All of these here were just intraday moves below the 200 EMA. And then we finally closed below the 200 EMA there, and we closed back above it. So out of all of these testing of the 200 EMA, we only had one day, just one day, where we actually closed below the 200 EMA. That was that bar right there. But we quickly regained it and closed right up back above there. Now, we still got these overarching forces with this regression channel as we're moving down. But we need to recapture that. We need to get back up above it. So these are a couple of key things that I'm watching. Clearly, the markets have moved out of momentum stocks, higher beta stocks, higher PE stocks, and have moved back into dividend-paying stocks, large cap stocks. And you can see that with the, if we go take a look at the treasuries, look at bonds. I mean, bonds has had through the year, if we box out just 2014 so you can see the movement. There's 2014 right there, okay, high to low. We entered 2014 way down there, and now we're way up there. So that's very easy. A 3-year-old can see that trend is just to the moon, right? So that means interest rates have dropped dramatically. And because interest rates have dropped dramatically, then dividend yield, our higher dividend yielding stocks are very attractive right now. So that's, in many respects, this is driving a lot of money into the large cap, like maybe the Dow or big dividends, and utilities. Now, if we look at the utility sector, you're going to see the same thing. Now, utilities started to give it up. That's a good sign. But if we look at utilities for the entire year, just like bonds, Here it is right there. There's the utility sector. We entered the year right there, and now we're right up there. Again, a 3-year-old can see that trend. That's just straight up like that. So we've got this huge move. Money is flowing into safe securities, and utility sector is traditionally a big dividend paying sector, and it's where money flows in times of risk. Or risk when risk is off the table, this is where money flows. One other chart I'm going to show you is our ratio chart. And on the ratio chart, I'm going to show you growth over value. And you can see here this huge, huge down move. I mean, if we start looking at this just for the month of March, you can see here that this thing just fell right out of bed, just like that. I mean, it just came straight down. That's when money, big money, flew out of growth stocks into value and dividend paying stocks. Just a big fall. And that's what caused a lot of the down move in the Russell and NASDAQ. Money stayed relatively stable, and even more money came into the Dow and the S&P 500 and out of these things like higher flying stocks, biotech stocks, and other things like that. Now, will this reverse and change? Well, we need to look at these kind of charts. We need to watch the Russell and NASDAQ very closely to see that if we've got a bottom and it starts to stabilize and move up, that'll give us a nice little comforting factor for the Dow and S&P. So that's a little bit about where we are this weekend. Now, also, I want to wish all our mothers out there a happy Mother's Day. And if you've got a mother, make sure that you send her flowers or take her out to dinner or do something really nice. Meanwhile, as I wrap this up, again, check the link here. You'll see a link that'll take you right to our members' special offer, membership and coaching. It's a very popular special offer that we're running with Tug. Hope to see you guys on the inside. Otherwise, have a great Mother's Day weekend, and I'll be in touch. See ya. Bye now.